Question 1. Insurance contracts. Which of the following is a key element that must be present for an insurance contract to be legally binding? A. The agreement must contain provisions for collateral to secure payment. B. Both parties must have legal capacity and consent. C. The contract must guarantee future financial profit for the policyholder. D. The insurer must be located in the state where the policyholder resides. Answer. B. Both parties must have legal capacity and consent. Explanation. For an insurance contract to be legally binding, the fundamental elements include offer, acceptance, and consideration, along with legal capacity and consent. Legal capacity refers to the ability of both parties to enter into a contract, i.e., both the insurer and the insured must be legally able to do so. Consent means that both parties must agree voluntarily without any undue influence. Collateral, option A, is not required for an insurance contract, nor does the contract guarantee financial profit for the policyholder. Option C, insurer location. Option D, also doesn't affect the binding nature of the contract unless governed by specific state regulations, which do constitute a primary requirement for contract formation. Question 2. Property and casualty insurance. Which of the following would typically be covered by it? A standard homeowner's insurance policy. A. Damage to a car parked in the driveway due to a hailstorm. B. Theft of personal property from a locked vehicle. C. Fire damage to a detached garage on the property. D. Injury to a guest caused by tripping on a sidewalk outside the property. Answer. C. Fire damage to a detached garage on the property. Explanation. A standard homeowner's insurance policy typically covers damage caused by fire to structures on the property, including detached garages. Damage to a car due to a hailstorm, option A, is usually covered by automobile insurance, not homeowner's insurance. Theft of personal property from a locked vehicle, option B, falls under auto insurance or a separate personal insurance policy, not homeowner's insurance. Injury to a guest, option D, caused by tripping outside the property may fall under premises liability insurance but is often excluded from a homeowner's policy unless the injury occurred within the confines of the covered property. Question 3. Scenario-based question. Licensing and continuing education. Mr. Smith, an insurance agent in Oklahoma, has been practicing for 5 years. He is due for his license renewal next month. He realizes he has not completed the required continuing education C hours for the past 2 years. What should Mr. Smith do to ensure his license is renewed on time? A. Since he has been practicing for 5 years, he is exempt from C requirements. B. He must complete the C requirements and submit proof of completion to the Oklahoma Department of Insurance before applying for renewal. C. He can simply pay the renewal fee without any further action since his license is not expired yet. D. He must notify the Oklahoma Department of Insurance that he missed the C requirement and request an extension. Answer. B. He must complete the C requirements and submit proof of completion to the Oklahoma Department of Insurance before applying for renewal. Explanation. Oklahoma law mandates that insurance agents complete continuing education C hours as part of the renewal process for their license. Failure to fulfill C requirements will delay the renewal process, and Mr. Smith must complete the required C hours, typically within the specified time frame, and provide documentation to the Oklahoma Department of Insurance (OKDOI) to renew his license. Option B. Option is incorrect as no agent is exempt from C requirements based on experience. Option C is incorrect as simply paying the fee without meeting C requirements will lead to the rejection of the renewal application. Option D is incorrect as the OKDOI does not generally grant extensions and the agent must complete the C hours on time. Question 4. Oklahoma insurance regulations. Which of the following is the most accurate statement regarding rate filing and approval in Oklahoma? A. Insurance companies can begin using new rates as soon as they submit them to the Oklahoma Department of Insurance (OKDOI). B. The OKDOI automatically approves any rate filings within 30 days unless otherwise specified. C. Insurance companies must receive approval from the OKDOI before using new rates for policies. D. Insurers may apply a rate change only if the OKDOI deems the rate unfairly discriminatory. Answer. C. Insurance companies must receive approval from the OKDOI before using new rates for policies. Explanation. In Oklahoma, insurance companies must receive approval from the Oklahoma Department of Insurance (OKDOI) before implementing new rates for policies. This ensures that rates are not excessive, discriminatory, or inadequate. Insurers must submit rate filings, and the OKDOI reviews them before the rates can take it. Option C. Option is incorrect because insurers cannot use rates before approval. Option B is incorrect because approval is not automatic within 30 days. Option D is misleading because rates must be approved by the OKDOI for all types of policies, not based solely on unfair discrimination. Question 5. Claims handling in settlement provisions. In the event of an insurance claim, the insurer is required to communicate the acceptance or denial of the claim within how many days under Oklahoma law? A. 5 business days. B. 10 calendar days. C. 15 business days. D. 20 calendar days. Answer: B. 10 calendar days. Explanation: Oklahoma law requires that insurers notify the policyholder within 10 calendar days whether a claim has been accepted or denied. This ensures that the policyholder is informed promptly about the status of their claim. Option is incorrect because 5 business days is not sufficient. Option C is incorrect because 15 business days is longer than the statutory period. Option D is also incorrect since the requirement is 10 calendar days, not 20. Question 6. Risk management concepts. Which of the following is the most effective strategy for an insurer when managing risk exposure to large catastrophic losses? A. Transfer the risk through reinsurance. B. Retain the risk by self-insuring. C. Avoid the risk by not issuing policies for catastrophic events. D. Reduce the risk by raising premiums for all policyholders. Answer A. Transfer the risk through reinsurance. Explanation: transferring risk through reinsurance is one of the most effective ways for an insurer to manage exposure to large catastrophic losses. Reinsurance allows an insurer to share some of its risks with another insurer, which helps mitigate the financial impact of large losses. Option B. Self-insuring may not be feasible for catastrophic risks due to their potential size. Option C is unrealistic, as insurers must address risks like catastrophes in a balanced manner rather than avoid them altogether. Option D. Raising premiums is not an effective strategy for mitigating large-scale risk, and it may not adequately address the potential for catastrophic loss. Question 7. Ethical and professional conduct. An insurance agent receives a referral from a friend who works for a competitor, and the agent offers a discount on premiums if the customer switches to their company. Which of the following is true regarding this scenario? A. The agent may offer a discount but must disclose the referral source to the customer. B. The agent is violating ethical guidelines by offering a discount to encourage switching. C. The agent must report the referral to the Oklahoma Department of Insurance for further review. D. Offering a discount is allowed as long as the agent does not pressure the customer to switch policies. Answer A. The agent may offer a discount but must disclose the referral source to the customer. Explanation: according to ethical guidelines, the agent can offer a discount to a new customer but must fully disclose the source of the referral, especially if there is a conflict of interest or compensation involved. A full transparency helps avoid any perceived unethical practices. Option B is incorrect, as offering a discount to encourage switching is not inherently unethical provided proper disclosure is made. Option C is incorrect because there is no requirement to report a referral unless it involves unethical conduct or violations. Option D is incorrect, as the agent must not only avoid pressuring the customer but also ensure that all aspects of the transaction are disclosed. Question 8. Insurance fraud and ethics. Which of the following is an example of insurance fraud under Oklahoma law? A. A policyholder inadvertently provides inaccurate information on their application. B. An agent misrepresents the terms of a policy to a client in order to secure a sale. C. A claimant fails to submit a claim in a timely manner due to an oversight. D. An insurance company incorrectly calculates the premium on a policy due to clerical error. Answer B. An agent misrepresents the terms of a policy to a client in order to secure a sale. Explanation: under Oklahoma law, insurance fraud involves intentional misrepresentation or omission of material information with the intent to deceive. An agent who misrepresents the terms of a policy to secure a sale. Option B is committing fraud. Option A, where inaccurate information is provided inadvertently, does not constitute fraud unless the misrepresentation is intentional. Option C, failing to submit a claim timely, is typically not fraud unless it involves deliberate intent to deceive. Option D refers to clerical error, not fraudulent behavior. Question 9. Insurance licensing requirements for entities. Which of the following is a requirement for an insurance agency in Oklahoma to obtain A corporate license. A. The agency must employ at least 3 licensed agents. B. The agency must designate a responsible individual to act as the agent in charge. C. The agency must have a physical office located within the state of Oklahoma. D. The agency must provide evidence of financial solvency through audited financial statements. Answer. B. The agency must designate a responsible individual to act as the agent in charge. Explanation. To obtain a corporate license in Oklahoma, an insurance agency must designate a responsible individual who will be accountable for the agency's activities, often referred to as the agent in charge. Option is not correct, as the number of agents is not licensing requirement. Option C is also incorrect, as physical office in Oklahoma is not specific licensing requirement. Option D is not required for standard insurance agency license, though financial solvency requirements may apply in certain cases, such as for larger entities or insurers. Question 10. Disaster insurance and emergency response. Which of the following types of coverage is typically provided by a homeowner's policy for damage caused by a tornado in Oklahoma? A. Windstorm damage is automatically excluded from homeowners' policies. B. Tornado damage is typically covered under the windstorm clause in the policy. C. Tornado damage is excluded but can be added as an endorsement to the policy. D. Tornado damage is covered by the National Flood Insurance Program (NFIP). Answer. B. Tornado damage is typically covered under the windstorm clause in the policy. Explanation. In Oklahoma, tornado damage is typically covered under the windstorm clause of a homeowner's insurance policy. This coverage applies to damage caused by high winds, including tornadoes. Option is incorrect because windstorm damage is usually included, not excluded. Option C is incorrect because tornado damage is not usually excluded and no endorsement is necessary. Option D is incorrect because the National Flood Insurance Program (NFIP) primarily covers flood-related damage, not windstorm or tornado damage. Question 11. Insurance fraud and ethics. Which of the following actions would constitute insurance fraud in Oklahoma? A. A policyholder submits a claim for damage that was already present before the policy was issued. B. A claimant submits a claim for a covered loss but inflates the value of the damage. C. An agent gives a gift to a policyholder for referring a new customer. D. A policyholder fails to notify the insurer of a change in address. Answer. B. A claimant submits a claim for a covered loss but inflates the value of the damage. Explanation. Insurance fraud occurs when a person intentionally provides false information to receive benefits they are not entitled to, such as inflating the value of damage in a claim. Option B. Option A. Submitting a claim for pre-existing damage could be considered misrepresentation but not necessarily fraud unless intentional deception is proven. Option C is a legitimate business practice in most cases, provided it does not violate agency guidelines. Option D. Failing to notify the insurer of a change in address is typically not fraud unless it affects the terms of coverage. Question 12. Insurer licensing. In Oklahoma, an insurance company that wishes to do business within the state must A. Only register with the National Association of Insurance Commissioners (NAIC). B. Be licensed by the Oklahoma Department of Insurance (OCDOI) to transact business. C. Only have an office in Oklahoma. D. Only be incorporated in the United States to be eligible. Answer. B. Be licensed by the Oklahoma Department of Insurance (OCDOI) to transact business. Explanation. Any insurer wishing to do business in Oklahoma must be licensed by the Oklahoma Department of Insurance (OCDOI). This ensures that the insurer meets state-specific regulatory standards. Option is incorrect because registration with the NAIC is part of the process but does not replace the need for a state license. Option C is incorrect as having a physical office is not the primary requirement. Option D is also wrong since a U.S. incorporation is a requirement, but the key factor is the state licensing. Question 13. Property insurance exclusions. Which of the following is typically excluded from standard homeowners insurance policies in Oklahoma? A. Damage caused by lightning strikes. B. Damage caused by an earthquake. C. Theft of personal property. D. Damage caused by vandalism. Answer. B. Damage caused by an earthquake. Explanation. Standard homeowners insurance policies often exclude earthquake damage. Earthquake coverage is typically available as a separate endorsement or policy. Option is incorrect because lightning damage is usually covered under standard homeowners policies. Option C is incorrect because theft of personal property is generally covered unless specifically excluded. Option D is incorrect because damage caused by vandalism is generally covered under most homeowners policies. Question 14. Adjuster qualifications. In Oklahoma, what is required for an individual to become a licensed insurance adjuster? A. The individual must hold a degree in business or insurance management. B. The individual must complete a pre-licensing education course and pass a licensing exam. C. The individual must have at least 5 years of experience working in the insurance industry. D. The individual must submit a background check but does not require formal training. Answer B. The individual must complete a pre-licensing education course and pass a licensing exam. Explanation. To become a licensed insurance adjuster in Oklahoma, individuals must complete a pre-licensing education course and pass a licensing exam. This ensures that adjusters are equipped with the knowledge necessary to handle claims fairly and legally. Option is incorrect because a business or insurance degree is not required. Option C is not necessary for licensing. Option D is incorrect as background checks are required, but formal education or training is still necessary. Question 15. Workers' compensation insurance. Under Oklahoma's workers' compensation law, which of the following is key benefit provided to an injured worker? A. Lump sum payment for medical expenses. B. Coverage for lost wages during the recovery period. C. Full reimbursement for all non-work related medical expenses. D. Lifetime benefits for permanent disabilities. Answer B. Coverage for lost wages during the recovery period. Explanation. Oklahoma workers' compensation law provides benefits to workers who are injured on the job, including coverage for lost wages during their recovery period. These benefits are designed to help workers financially while they recover from their injuries. Option is incorrect because workers' compensation typically covers medical expenses, but not as a lump sum payment. Option C is incorrect because only work-related injuries are covered. Option D is incorrect as lifetime benefits are not automatically guaranteed for all permanent disabilities. Question 16. Insurance policy cancellation. Under Oklahoma law, which of the following is true regarding the cancellation of an insurance policy by an insurer? A. The insurer must provide at least 30 days written notice before cancelling a policy. B. The insurer may cancel the policy without any notice for non-payment of premiums. C. The insurer must provide at least 15 days notice if the cancellation is due to non-payment. D. The insurer is not required to provide any notice for cancelling a policy. Answer A. The insurer must provide at least 30 days written notice before cancelling a policy. Explanation. Under Oklahoma law, an insurer is required to provide at least 30 days written notice before cancelling policy, unless the cancellation is due to non-payment of premiums, in which case the notice period is shorter. Option B is incorrect because the insurer must provide notice even for non-payment. Option C is incorrect because the notice period for non-payment is generally 10 days, not 15. Option D is incorrect because insurers are generally required to provide notice for policy cancellations. Question 17. Flood insurance coverage. Which of the following statements is true regarding flood insurance in Oklahoma? A. Flood insurance is typically included in standard homeowners insurance policies. B. Flood insurance is mandatory for all homeowners in Oklahoma. C. Flood insurance must be purchased separately through the National Flood Insurance Program, NFIP. D. Flood insurance is not available in Oklahoma. Answer C. Flood insurance must be purchased separately through the National Flood Insurance Program, NFIP. Explanation. Flood insurance is not typically included in standard homeowners insurance policies and must be purchased separately through the National Flood Insurance Program, NFIP. Option is incorrect as flood coverage is excluded from standard policies. Option B is incorrect because flood insurance is not mandatory for all homeowners, but it may be required for those in flood-prone areas. Option D is incorrect because flood insurance is available through the NFIP. Question 18. Underwriting and risk selection. When underwriting an insurance policy, what is the primary factor an insurer considers when determining the premium rate for a homeowner's policy in Oklahoma? A. The policyholder's credit score. B. The level of coverage selected by the policyholder. C. The policyholder's marital status. D. The construction materials used to build the home. Answer D. The construction materials used to build the home. Explanation. When underwriting a homeowner's policy, the insurer considers various factors to assess risk, including the construction materials used to build the home. Homes built with more fire-resistant materials, for example, may be less risky and therefore result in lower premiums. Option A. The credit score is also a factor, but not the primary one. Option B is incorrect because the level of coverage influences premiums but is not the primary underwriting factor. Option C is not typically a major consideration for setting premiums. Question 19. Health insurance and benefits. Which of the following health insurance benefits is required by the Affordable Care Act to be covered in Oklahoma health plans? A. Cosmetic surgery procedures. B. Maternity and newborn care. C. Acupuncture and alternative treatments. D. Vision care for adults. Answer B. Maternity and newborn care. Explanation. Under the Affordable Care Act, health insurance plans must cover essential health benefits, including maternity and newborn care. This is a mandatory benefit for plans offered through the ACAM marketplace in Oklahoma and other states. Option is incorrect because cosmetic surgery is not a required benefit. Option C is incorrect because acupuncture and alternative treatments are not universally covered. Option D is incorrect because vision care for adults is not required under the ACAT, though pediatric vision care is. Question 20. Insurance policy endorsements. Which of the following is an example of an endorsement that might be added to a homeowner's insurance policy in Oklahoma? A. Flood coverage endorsement. B. Fire damage exclusion endorsement. C. Personal injury liability endorsement. D. Earthquake exclusion endorsement. Answer: a flood coverage endorsement. Explanation: a flood coverage endorsement is an example of an addition to a homeowner's insurance policy to cover risks not included in the standard policy. This endorsement provides coverage for flood-related damage. Option B is incorrect because a fire damage exclusion would typically not be added to a homeowner's policy. Option C is incorrect because personal injury liability would not usually be added through endorsement to homeowners insurance. Option D is incorrect because earthquake exclusions are not typically added as endorsements but are usually part of the policy's exclusions. Question 21. Liability insurance coverage. Which of the following scenarios would be covered under a general liability insurance policy in Oklahoma? A. A customer's injury from slipping on a wet floor inside a retail store. B. A business vehicle causing damage to a customer's property in an accident. C. A contractor's equipment being stolen from job site. D. An employee's on-the-job injury at manufacturing plant. Answer A. A customer's injury from slipping on a wet floor inside a retail store. Explanation: general liability insurance typically covers third-party injuries that occur on a business's premises, such as customer slipping on wet floor. Option A. Option B would be covered under commercial auto insurance, not general liability. Option C is covered under property insurance or business personal property policy, not general liability. Option D pertains to workers' compensation insurance. Question 22. Umbrella insurance. Which of the following is a typical use of an umbrella insurance policy in Oklahoma? A. To cover medical expenses not paid by the policyholder's health insurance. B. To provide additional liability coverage above the limits of standard policies. C. To cover the costs of auto repairs after collision. D. To provide coverage for personal property lost in natural disaster. Answer: B. To provide additional liability coverage above the limits of standard policies. Explanation: umbrella insurance is designed to provide additional liability coverage above the limits of other policies like homeowners and auto insurance. Option is incorrect because umbrella insurance does not cover medical expenses. Option C pertains to auto insurance, not umbrella insurance. Option D would typically fall under a property insurance policy, not an umbrella policy. Question 23. Flood insurance requirements in Oklahoma. Flood insurance is primarily offered through which of the following programs? A. The National Flood Insurance Program (NFIP). B. The Federal Insurance Guarantee Fund (FIG). C. The Flood Protection Initiative (FPI). D. The State of Oklahoma Flood Relief Program. Answer A. The National Flood Insurance Program (NFIP). Explanation: flood insurance in Oklahoma is primarily offered through the National Flood Insurance Program (NFIP), a federal program that provides coverage for flood-related damages. Option B, C, and D are not recognized flood insurance programs. Question 24. Property insurance claims. If an Oklahoma homeowner experiences A total loss due to a covered event. How is the amount of the claim typically paid under a replacement cost policy? A. The insurer pays only the market value of the property at the time of the loss. B. The insurer pays the actual cost of replacing the property with a similar one, regardless of depreciation. C. The insurer pays the replacement cost minus a deductible. D. The insurer pays the difference between the actual cash value and the replacement cost. Answer: B. The insurer pays the actual cost of replacing the property with a similar one, regardless of depreciation. Explanation: under a replacement cost policy, the insurer pays for the cost of replacing the damaged property with a similar item without factoring in depreciation. Option A refers to an actual cash value policy which factors in depreciation. Option C is incorrect because it lacks specificity. Option D incorrectly combines elements of both replacement cost and actual cash value policies. Question 25. Fire insurance coverage. Which of the following types of property would typically be covered under a standard fire insurance policy in Oklahoma? A. Personal property damaged by fire. B. Loss of rental income due to a fire. C. Business interruption caused by fire. D. Fire damage to the foundation of a building. Answer A. Personal property damaged by fire. Explanation: a standard fire insurance policy generally covers the damage or destruction of personal property due to fire. Loss of rental income and business interruption would be covered under separate endorsements like business income coverage or loss of rents coverage. Damage to the foundation would typically be covered under property damage coverage in a homeowner's or commercial property policy. Question 26. Insurance adjuster roles. Which of the following is a key responsibility of an insurance adjuster in Oklahoma? A. Writing the policy for the policyholder. B. Evaluating and settling claims. C. Setting the premium rate for the policy. D. Handling the marketing and advertising of the insurer's products. Answer: B. Evaluating and settling claims. Explanation: an insurance adjuster's primary responsibility is to evaluate and settle claims, determining the extent of coverage and the amount of compensation the policyholder is entitled to. Option refers to the role of an underwriter. Option C pertains to the role of an underwriter, not an adjuster. Option D refers to marketing roles, not claims handling. Question 27. Legal duty of insurers in Oklahoma. What is the insurer's legal duty when a claim is submitted? A. To deny the claim if the policyholder does not have sufficient evidence of loss. B. To settle the claim within a reasonable amount of time, either by payment or denial. C. To investigate the claim but deny payment immediately if it is not covered. D. To automatically approve the claim if the policyholder is not at fault. Answer: B. To settle the claim within a reasonable amount of time, either by payment or denial. Explanation: insurers in Oklahoma have a legal duty to investigate and settle claims within a reasonable period. They must either pay the claim if valid or deny it with proper reasoning. Option A is incorrect because insurers should investigate claims thoroughly. Option C is wrong because a denial cannot be immediate without proper evaluation. Option D is not accurate because payment depends on the validity of the claim. Question 28. Underwriting and risk classification. What is the main purpose of risk classification in insurance underwriting? A. To determine the minimum coverage limits for a policyholder. B. To assess the likelihood of a claim and set premiums accordingly. C. To decide which types of policies a customer is eligible for. D. To provide discounts based on the customer's claim history. Answer: B. To assess the likelihood of a claim and set premiums accordingly. Explanation: risk classification in insurance underwriting helps insurers assess the likelihood of a policyholder making a claim. Based on this risk, the insurer will set the appropriate premium. Option is incorrect because classification helps set premiums, not just coverage limits. Option C is partially correct but not the primary purpose. Option D refers to premium adjustments but is not the main reason for risk classification. Question 29. Workers' compensation coverage. Which of the following statements about workers' compensation insurance in Oklahoma is true? A. Workers' compensation insurance is optional for businesses with fewer than 5 employees. B. Workers' compensation coverage includes medical expenses and lost wages due to work-related injury. C. Workers' compensation insurance only covers injuries sustained while working at the office. D. Workers' compensation insurance is only available to businesses in high-risk industries. Answer: B. Workers' compensation coverage includes medical expenses and lost wages due to work-related injury. Explanation: In Oklahoma, workers' compensation provides coverage for medical expenses and lost wages if an employee is injured on the job. Option is incorrect because workers' compensation is mandatory for most businesses with employees. Option C is incorrect because workers' compensation covers all work-related injuries, not just those in the office. Option D is incorrect as it applies to most businesses, not just high-risk industries. Question 30. Flood insurance availability. Flood insurance coverage is typically available for which of the following types of properties in Oklahoma? A. Only properties located in flood zones designated by FEMA. B. Only properties covered under the National Flood Insurance Program (NFIP). C. Only properties with a history of flooding. D. Only commercial properties, not residential properties. Answer: B. Only properties covered under the National Flood Insurance Program (NFIP). Explanation: Flood insurance in Oklahoma is available through the National Flood Insurance Program (NFIP) and is not limited to properties in flood zones, though properties in high-risk areas are often required to have it. Option is incorrect because flood insurance is available regardless of whether the property is in a designated flood zone. Option C is incorrect because flood insurance can be purchased even if there is no history of flooding. Option D is incorrect because flood insurance is available for both residential and commercial properties.